Shannon, DJ, what happens to the money in TFSA when the second spouse dies? Second spouse mean not second wife, just a spouse. When the second spouse dies, will it be directly paid to the beneficiary in case of stock? MF versus SEC fund, mutual fund versus SEC funds. What are the benefits of SEC funds actually?
Okay, that's a lot of questions. Okay, so let's start off with tax-free savings account. Tax-free savings account is one of the only times that as far as I'm concerned in Canada, that the government has not lied to us. When they say it's tax-free, they actually mean it's tax-free. So we can withdraw from there, we can pass away and hand that money down, and it's still going to go in a tax-free manner. It is the only account that we have currently available in Canada that when we die and we pass it down, the cash value of that, we pass it down to a non-spouse at the time of passing, that non-spouse does not have to claim it as income, and I don't have to claim it at the time of my death as income as well. So it does still get passed down through the beneficiary in a tax-free manner. So even if I'm the last surviving spouse and I'm leaving the money to my children, they will still receive it in a tax-free manner because it has that designated beneficiary, it's not a part of probate, and it is a tax-free account. So again, the only time as far as I'm concerned, Canadian government hasn't totally lied to us. Will it be paid directly to the beneficiaries? Absolutely. So with most financial companies, once a death has been proved, so whether that's through an actual death certificate or funeral certificate, funeral director's certificate that you get right from the funeral home, once that document is produced, then from there the beneficiaries sign a document. If there's trustees involved, because that beneficiary is under the age of 18, they would be the one that sign, and then the funds are paid directly to the beneficiary. That can either happen as a direct deposit into a bank account or a check in Canada Post. In the case of stocks and mutual funds, ultimately tax-free savings account is along the same lines as far as the type of account, the rules and regulations are the same across the board. But when it comes to what's inside that tax-free savings account, so in this case, stocks, bonds, mutual funds, those types of investments do come with their own rules and regulations and can have a decent sized fee attached to it at the time of passing if the funds are not going to stick with that financial institution. And so I know DSC is not available right now, but I'm going to use that as an example just because it's the easiest way to describe it. If I have a tax-free savings account and I have placed that into a deferred sales charge option, so it's on a schedule, if I withdraw, I'm going to have some fees attached to it, and I happen to die. I pass away in year 3, and the current deferred sales charge is 4%. That means most likely that financial institution is going to collect the 4% from my investments before they pay it out to the beneficiary. Unlike segregated funds and most of the insurance companies that are involved, our business is based on beneficiaries. Our business is based on life insurance products that end up paying out to the beneficiary, and most life insurance companies do waive the fees at the time of passing, so those are not passed on to the beneficiaries. Therefore, they get to take home a little bit more in their pockets than they would on the other side. Some of the biggest benefits that we talk about when we talk about seg funds, and before I get into that, really to understand the benefits of seg fund, you have to understand what a seg fund is. And the short and the sweet answer of that is a segregated fund is a mutual fund where the insurance company has come along, wrapped their arms around it, and provided it with some protection. And that's not just protection for the fund itself, it's protection for the people who own it. So when we're talking about a segregated fund, it comes with that additional protection of death benefit guarantees, maturity guarantees, the opportunity for resets so we can add to the value of our net worth over the long period of time. But when we're talking about those benefits of seg funds and we're talking about different trusts, we're talking about death that's coming up, we're talking about the life of it, we have to understand that a segregated fund is ultimately a mutual fund that comes through a segregated fund contractual agreement. And when you understand that the contractual agreement comes with 3 job forms of an annuitant, an owner, and a beneficiary, and you understand those different job titles of that contractual agreement, we can manipulate it from the insurance side to make sure it fits your client's needs. So when we're talking about the benefits of a SAG fund, we're not just talking about the black and white benefits of the death benefit, the maturity guarantee. We're also talking about the ability to mirror trust accounts, so we can save our clients' monies when it comes to dealing with lawyers. We're talking about the ability to have generational wealth pass through the segregated fund, giving it protection on most levels, including if that individual family has to claim bankruptcy or get sued for something. We have benefits with the segregated funds that we can't get anywhere else, just simply because of that contractual agreement that comes from the insurance side. So this is an opportunity for us to really dive in deep and find the place for segregated funds in every aspect of life.
Thank you, Shannon. Guys,